Okay, if you're an investor trying to figure out what's going on in the world right now, you know the feeling, right? It's just this constant flood of headlines, data, opinions, all of it screaming for your attention. So, as we look ahead to 2026, the real challenge isn't getting more information, it's figuring out what actually matters. In this explainer, we're going to try to cut through all that static and lock in on the fundamental signals that are likely to shape the year ahead.
I mean, let's be real. 2025 was a masterclass in chaos. We had a completely reshaped political landscape, huge shocks to global trade, a pretty steep market correction, and oh yeah, the longest government shutdown in U.S. history. The headlines were just relentless and, frankly, kind of unsettling.
And yet, here's the crazy part. Despite all that turbulence, it was an amazing year to be in the market. Most major stock categories, we're talking U.S. stocks, international stocks, they were up by double-digit percentages. It's a perfect example of the headlines telling you one story, while the market is telling you something completely different.
So that brings us to the big question for the year ahead. What is the real story? You know, how do we separate the stuff that actually drives markets from all the daily drama? To do that, we need a framework.
And that framework is the signal versus the noise. The signal, that's the fundamental underlying force that's quietly steering the markets. Think of it like a deep ocean current. The noise is, well, it's everything else. The distracting headlines, the political fights, the short-term freakouts. Our job today is to find that signal. So, let's get into our first major signal. This is the quiet, kind of stealthy engine of the whole market, corporate earnings. You know, this is the stuff that doesn't always make the front page, but it's where the real value gets built.
Now, check this out, because this tells a really interesting story about the health of the market. For a lot of 2025, all the growth was packed into just a few companies, the magnificent 7 tech giants. Their earnings grew by a staggering 27%. The other 493 companies in the S&P 500 grew by a much more normal 8.1%. But here's the key. Looking ahead, that gap is closing. Growth is spreading out, which is a way healthier sign for the market as a whole.
Denise Gissel, over at Fidelity, actually calls this a turning point. We're shifting away from one of the narrowest recoveries in history to something much more broad-based. And that suggests a much stronger foundation for growth in 2026.
Okay, on to our second signal. It's a topic you've heard a ton about, but maybe not quite like this, the AI build-out. And I want to be clear, this isn't about hype. It's a fundamental economic shift that's happening right under our noses.
Just get a load of this number. Around 60%, 60, of recent U.S. economic growth has come from companies spending money on AI infrastructure. We're talking data centers, chips, cooling systems, all the foundational picks and shovels of this AI revolution. The sheer scale of this investment is just immense.
I absolutely love this analogy because it captures where we are perfectly. Right now, we are in the infrastructure phase. Companies are laying down the tracks for AI, but the trains, full of economic goods, the real-world applications and profits for most businesses, they haven't even started running yet. The biggest impact is still way out in front of us.
And that brings us to our third signal, which means we have to look outside our own borders. For years now, the U.S. has been the main story in investing, right? But in 2026, the global picture is starting to look a lot more compelling.
I mean, the data here is just crystal clear. Look at the forward price-to-earnings ratio. That's basically what investors are paying today for profits a year from now. U.S. stocks are trading at 22.3 times future earnings, which is way above their 10-year average. International stocks, just 15.1, right in line with their average. Oh, and their dividend yield is more than double. From a pure value perspective, the opportunity overseas is pretty significant.
And there's another tailwind here too. The U.S. dollar dropped quite a bit in 2025. Now, for U.S. investors, a weaker dollar is actually a good thing. It means that when you convert your profits from foreign stocks back into dollars, you get this really powerful extra boost to your returns.
Okay, so we have our 3 key signals. But what about all that noise we talked about? Let's just tackle a few of the biggest worries head-on, because this is exactly where investors can get sidetracked.
This is the big one, right? We hear it constantly. The market is expensive, so it has to crash, right?
Well, not necessarily. According to Fidelity's research, you can reframe this. Think of high valuations as the market's vote of confidence in future growth. Now, it does mean good news is already priced in, which can make stocks a little more vulnerable to shocks, but it's not a trigger for a crash on its own. The key thing to remember is, it's a condition, not a catalyst.
And of course, the other big piece of noise, AI.
Anytime a new technology gets this much hype, the bubble question starts popping up. Is this just another dot-com bust waiting to happen?
But you have to look at the context. Experts like Jury and Timmer point out that we are nowhere near the extremes of the late 90s. And this is critical. Today's AI build-out is being funded overwhelmingly with cash flow from very profitable companies, not with a mountain of debt like during the dot-com era. It is a much, much more solid foundation.
And finally, let's talk about the constant chatter around the Federal Reserve. You know, the appointments, the court cases, the political pressure. It's so easy to get lost in that daily drama.
But again, let's think bigger picture. The Fed is like a massive ship. It does not turn on a dime. Its institutional direction is incredibly slow to change, no matter who's at the helm. So instead of getting caught up in the headlines, the real signal to watch is the slow, gradual turn in that ship's overall policy.
So, after we cut through all that noise, what are we left with? Let's just pull it all together into a clear compass to help you navigate the year ahead.
So here they are, your key signals for 2026. First, an earnings recovery that's getting healthier and spreading out. Second, a massive AI infrastructure project that's really just getting started. And third, a really compelling case for looking globally, especially with a weaker dollar. These are the core drivers to keep in focus.
Look, the world is never going to be quiet. The noise is a constant. The real question is about focus. Now that you have this framework, what signal are you going to choose to follow in the year ahead?